What an interesting day today on AMC Stock, because this is one of those teaching moments, because what happened this morning and throughout the entire session, man, I don't know. So we're going to talk about that. We're also going to talk about a metric, a data that is predicting that, hey, maybe we are entering that run up, not to the 70s, because I think we still have potential to go beyond the 20s. And finally, what to expect when it comes to tomorrow being a very decisive day on the market. All right. So looking at the chart on today, like every other morning, I'm checking AMC per hour. I'm checking the market, just to see what is happening. And I see AMC almost 9% pre-market. Literally 15 minutes before the opening bell, this is at 9%. So I'm telling myself, if somebody is, checking out now and it's willing to sell because it's already at 9% pre-market, it means maybe we're going to see 19, 17, 14. I don't know. So if you sold at that price pre-market, you would have missed a 20% run up. 20% run up. Yeah, because look, from the low 2080 we had this morning all the way up to the 25, that is a 20% swing only today. All right. So you would have missed big and you would have kicked yourself in the butt because you missed that huge run up. All right. So I do believe we still have the potential for this to go beyond, maybe 20, maybe 19, but nobody knows. All right. So we just have to be careful. And by careful, I mean prepared psychologically and mentally. All right. Because it's very definitely difficult to stomach a drop from the 30, 35 to the 20s in just a couple of days. It's hard, all right? So you have to be prepared so that you know what to do and you don't let your emotion get rid of you, get the most of you, because anytime you tend to act based on your emotion, it's not a good decision you're making. Now, let's look at another metric, another data around the volume, because today one of those days where we had exceeding 100 million shares traded. All right, this is insane. But wait a minute, what about the Doppel volume? Because we know that they usually fluctuate between 55 to 60%. Meaning this is what the hedges are doing on their part. So if I remove those 60%, all right, I'm still living with 46 million shares being traded from who? I'm guessing the retail investors, all right? Swing traders, day traders, FOMO buying, or some people just trying to average down or increase the share position because they already know what AMC is capable of doing. They already know what is coming up. So remember, when the share price, went all the way up to 21st here, we had a huge increase in volume. All right. So, and then everything dried out. And then here, boom, we had another huge increased volume and everything started slowly to die and to dry out since we got here. And now we have another spike into the volume. So maybe history is telling us that it's about to repeat itself. But again, it doesn't have to follow the same pattern just because the volume spiked today. All right. We are still very lower than the 300 million shares or the 250 million shares traded when this thing was spiking up to the 60s or the 70s. So again, still have to be careful, but it's encouraging because it means people are still interested into getting into the stock. All right. Whether it's for, swing trade or day trade, it means, hey, we are still buying these things. We are not going nowhere, because if you look at any media outlet there covering what is happening with AMC and GameStop, they are telling you that we are selling to free up cash, to free up money, because we need money as the expensive holiday season is coming up, which is totally BS. This is nonsense. C'est fou. C'est crazy. All right. So just be careful out there. All right. So let me finish by saying this. Tomorrow is one of those days where it's either, depending on what Mr. Powell is going to say, it can make a very green day or it can make a very red day. All right. So I'm going to dwell into that in a separate video I'm going to publish later today on what to expect the market to react based on what the Fed is going to say, according to my personal opinion. All right. So watch out for that to pop later today on my YouTube channel. So let me finish also by saying this. This price that we are, I know it might be scary for some of us, but it is still a very, very interesting place to be, especially when it comes to the short sellers trying to what? Cover. That's what we want to see. We want them to exit the play and get out so we can collect the tendies. But when the price is this low, I mean low based on where we were to the 50s or the 70s, it is interesting for them to start covering now. So short sellers, if you're listening to me, please, you better start covering now, because not only is it going to be cheaper for you, so it's going to be, less damages to your portfolios and for your clients' money, all right? Rather than covering at 40 or 50 when we ride this all the way up. So it's not a bad thing necessarily that we are sitting around the 20 now. I know it sounds incredible, but it's not that bad, right? Because the first one who's going to start covering at this price is going to create that domino effect. So I guess we still have to hang here and wait for it to happen. So thanks for watching. I will see you in the next one about the Fed meeting.